TV Asia Telugu talk show with experts. So TV Asia Telugu viewers అందరికి very happy new year అండి. 2021 అందరికి చాలా హ్యాపీగా ఉండాలని టీవీ ఏషియా తెలుగు తరపు నుంచి అందరికి విషెస్ చెప్తున్నాము. ట్యాక్స్ షో కూడా సరికొత్త టాపిక్స్ తోటి మరి 2021లో ఇంకా చాలా ఇంట్రెస్టింగ్ గా ముందుకు సాగబోతుంది. సో ఇప్పటివరకు జరిగిన చాలా షోస్ ఆర్ వెరీ ఇన్ఫర్మేటివ్, మీ అందరికి చాలా యూజ్ అయి ఉంటాయని డెఫినెట్ గా మేము అనుకుంటున్నాము. బికాస్ ట్యాక్సెస్ అనేది మనందరికి చాలా ఇంపార్టెంట్ కాబట్టి డెఫినెట్ గా చాలా కొత్త ఇన్ఫర్మేషన్ మీరు నేర్చుకొని ఉంటారు, దాన్ని అప్లై చేసి ఉంటారని నేను అనుకుంటున్నాము. అనిల్ గారు, వెల్కమ్ టు ద షో అండి. హ్యాపీ న్యూ ఇయర్ 2021. మీరు న్యూ ఇయర్ కొత్తగా హ్యాపీగా స్టార్ట్ చేసి ఉంటారని అనుకుంటున్నాము. ఎలా ఉన్నారండి?
Sure, and thank you very much, Lasmi garu, and thanks for the wishes, and happy new year to you, and happy new year to all the viewers. Yes, my new year started great with the new announcements from the government, so we are very busy. Good, but started great.
థ్యాంక్ యూ సో మచ్ అండి. సో మరి మనం 2021లో ఫస్ట్ షో చేయబోతున్నాం ఈరోజు. సో డెఫినెట్ గా మనకి ఇంకా చాలా ఎన్హాన్స్మెంట్స్ తోటి చాలా ఇన్ఫర్మేటివ్ సెషన్స్ తోటి మన ట్యాక్స్ షో ముందుకు సాగుతుంది. సో ఈ రోజు మరి మనం ట్యాక్స్ స్మార్ట్ కాలేజ్ సేవింగ్ స్ట్రాటజీస్ ఫర్ పేరెంట్స్ అనే టాపిక్ మీద డిస్కస్ చేయబోతున్నామండి. సో మన అనిల్ గారి గురించి, అనిల్ గారి ఎక్స్పర్టైజ్ గురించి మన అందరికీ తెలుసు. బట్ ఎవరైనా న్యూ ఇయర్ లో కొత్తగా జాయిన్ అయి ఉంటే వాళ్ళ కోసం అనిల్ గారి ఎక్స్పర్టైజ్ ఏంటి అనేది ఒకసారి చూద్దామండి. సో he has 15+ years of experience in finance profession as finance controller, CFO, and he holds other executive positions. He worked in great organizations like Amazon, Starbucks, PwC, and Sun Edison. So he is helping his clients take advantage of tax planning opportunities and strategically setting up the client's businesses for success. So he has a great team of CPAs, chartered accountants, and other financial professionals. So if you have or if you need any personal one-on-one meeting with Anil garu, so please call AGFintax, and so that you can have one-on-one talk with him. So thank you, Anil garu. So మరి మన షో స్టార్ట్ చేసేద్దామండి.
Sure, and Tapkonda Lasmi garu, and as we know, the 2000 year is a great pandemic. I mean, it's a great up and downs. Most of us has gone through a lot of tough times. We have gone through a pandemic situation. The entire economy gone through a pandemic situation, and we are so glad, and we are coming out from this pandemic with a good health and with a lot of hope in the year 2021. And I believe that the best and the better way to start saving is for our Indian community mostly, one of our always wish and vision is how to save money for our kids. So, and I strongly believe that people who ever do savings for their kids' education, they should be financially savvy, and there are different tax saving strategies can be used to save money for our kids' education. And it's all about passing on the benefit to the next generation. So how you do it, how efficiently, how tax efficiently you can do this. And I believe this is a very good strategy to start with the year. Let's jump into the topic now.
That's absolutely true and correct, Andy. And as we can say, Indian parents, we always want to support our kids for their college education. And we always want to pay that college education no matter what. So definitely, this is going to be a interesting topic for all of us, including me. So let's talk about college expenses, Sandy.
So first of all, the college is very expensive. The college expense itself is very expensive. On an average, for a public 4-year institution at in-state, people are spending approximately $21,950. That's an average. If it's an in-state college. If it's an out-of-state college, it is $38,330. And if it is a private institution, if your kid is going to a 4-year private institution, then the average expenses is $14,879 is what, including tuition fee, room, and board. And are very expensive. So if you think about for those prices are for 1 year how it would be for the 4 years. So 4 years from in-state, it is coming to approximately 87,800 MB. And if it's a private school, if it's a private college, then it is 199,500 MB. What all these numbers are based on statistical reports, actual true data analysis MB. Other thing which I want to talk about here is college loans, student loans. So most of our students who are living in US, they depend on college loans and the student loan debt. So as per statistical reports, student debt is the second highest debt after the mortgage debt in United States of America. And the average student debt is approximately $29,200 average student debt at this point. And the total, it is totaling to $1.6 trillion student debt is there in US at this point. And this debt is keep increasing because the college fees are increasing, and people who are taking more loans for their college education, the number also increased. So on average, the year on year, the student debt, the average student debt is increasing by approximately 2% year on year. It is going. So overall, it is very expensive. So we need to have a plan how to do it. If you don't have a plan, if an employee just depending on W-2, and if they don't have a lot of savings, how they are going to pay all these fees? It's very difficult. So then, do you want to really get into the loan debt, or you want to do some planning from now so that you are not giving any debt responsibilities to your kid, so that he can start his career afresh without any debt? So what is right, we will discuss.
Through these numbers, you mean to say tax smart college savings strategies can make college costs more manageable, right, Andy?
Yes, Andy. So as I'm saying, savings are very important. Instead of saving the money in the bank account or in a taxable assets, there are many ways available. There are few ways available where you can build funds for your kids' education in a tax saving strategy, with a tax saving strategies. There are a lot of saving plans are available. So I want to start with one first. The first one is called 𝗘𝗦𝗧 Education Savings Account. How does this work? Every year, a parent can contribute up to $2,000 for their kids' education, and it is called 𝗘𝗦𝗧 Education Savings Account. You can open to any bank and you can open this account. So when you contribute this $2,000 per year per kid, it is not tax deductible, but it grows tax free, and you can withdraw money for the kids' education purpose tax free. Like if you have some money, maybe if you want to save $2,000 per year for your kid to take care of his college expenses once he grows big, once you start going to the college. If you deposit in the savings account, if you deposit in the stock market, if you deposit in any real estate market, and if you're planning to sell the property later, you will be paying taxes in all these sequence, in all these scenarios. But if you invest $2,000 per year in this CESA plan, it's a 𝗘𝗦𝗧 Education Savings Account, then when the money goes big, even the accumulated funds on that savings account or the savings account is not taxable, and you can withdraw this money at the time when the kids go to college, either for post-secondary fees or books, supplies, or room or boarding expenses for the beneficiary account. So when you create an account, you need to mention who is the beneficiary of this account. So then they can use the money, they can withdraw money when they need for their education purpose, and it is tax free both for the contributor and also for the beneficiary.
So is there any income limit or phase out?
Yes, Sandy. There are some contribution limits are there. So if your income is more than $95,000, you are a single person, a single tax return filer, and if your income is more than $95,000, but if you're increasing, if your income is more than $95,000, and it will start phasing out, and by $95,000 to $110,000, modified adjusted gross income is more than $110,000, you will not get any, you are not eligible to contribute for this. But if you are married filing jointly, up to $190,000 MAGI, modified adjusted gross income, you can contribute this $2,000 per kid. But if you're after $190,000, it start phasing out up to $220,000. So $190,000 to $220,000. If you are married filing jointly, the phasing will happen. After $220,000, if your income is more than $220,000 joint filing tax return, then you are not eligible for this contribution.
So by when should this contribution be made? And
the good thing here is you don't have to this contribution by December 31st. You can do this contribution by April 15th of the last year, of the following year. Like example, for 2020, you can do the contribution by April 15th, 2021.
What about Section 529 College Savings Plan?
This is a very popular plan, and the college saving plan. It has a lot of advantages. Of course, generally, if you talk about most of the investment strategies, they have pros, they have cons. So we will discuss both. And first I will explain what is this 529 plan. This is also one of the very common question I get from my clients most of the times. So because they have the kids, they want to save money. So someone would have told them what if they can invest in 529 plan, but no one has a lot of details. But I would like to give some clarity here. So basically, the 529 plans are offering a value-added tax benefits, and they are really flexible. So the Section 529 college plans are state-sponsored plans, and the 529 means it's an Internal Revenue Code section number 529, where they discussed about the income tax liability on these savings, and also whether it's a taxable or not taxable, and also they also discussed about gift tax rules in the section 529. So the name itself is called, based on section IRS Internal Revenue Code section reference. The savings plan name itself is changed to, it has become more popular like section 529 college savings plan. And as you are a parent, and if you want to contribute to this section 529 plan, you have to designate the beneficiary name. So to whom you are contributing. If you have a couple of kids, so you have to tell, okay, for this kid I am doing this, for this kid I am doing this. So you have to clearly mention who is the beneficiary here. And you can do the contributions either installment, like every month you can do, yearly once you can do, or you can also do one-time payment. I will explain those details also. There's a one-time payment options also there for every periodical. Every 5 years once you can do a payment. And in the essence, section 529 college saving plan account is a tax advantaged way to build up a college fund for your child. When you contribute, you don't get any tax deduction from the federal side, but when you withdraw money for your college education purpose, it is not taxable. It's a tax-free withdrawals.
So if you use it for college education.
Yes.
So what are the tax advantages of opening a 529 account?
So as I was saying, there are two types of advantages we have. One, income tax advantages. Number two, estate tax advantages. So what is this income tax advantages? As I mentioned just now, you can withdraw when your kid go to the college, a beneficiary can withdraw this money to take care of qualified college expenses of the beneficiary. They can withdraw, and all those withdrawals are tax-free. And when you contribute at a federal level, there are no tax deductions, but some states allow a tax deduction when you contribute to the 529 plan. Some states allow in-state plan. There are two types of plans every state has. Every state has a 529 plan, as I mentioned, it's a state-sponsored plan. In-state plan, out-of-state plan. So the in-state plan, some states allow if you contribute money only for the in-state plan. Some state allows both in-state and out-state. So basically you need to check with your state what works for you. whether it's a tax deductible or not, because there are 50 states. It's difficult to explain if what state is applicable, but you can just spend some time and you can find it. You will come to know whether your state is eligible for the 529 deduction or not. Like example, I live in Washington state. It's not deductible here. So of course we don't even need to file state tax return. That's a different story.
Oh, what are estate tax advantages of 529 account?
For this year, the estate tax limitation is $11.7 million federal gift tax. Like example, you can give a gift to anyone up to $11.7 million in the lifetime. So, and if you give gift less than $15,000 to anyone, you don't need to do any reporting to IRS or to any other department. So, for section 529 plan contribution, anyone can give gift to the 529 plan for the kids' education purpose up to $15,000. And even you can give more than $15,000 also, like up to $75,000. But you need to come in, you need to sign up on a document saying that next to 5 years, $15,000 limitation, you are utilizing it. So as I said, $15,000 you can give gift to anyone. Why can't you give that gift to your kid, so that you are passing on your assets to the next generation? So if 50, so up to 15, so can I contribute more than $15,000 to my kids' 529 plan? Answer is yes, but maximum is $75,000. But you need to sign up a document saying that you are doing this contribution for the next 5 years. So if you follow this, so like this, $75,000 each parent can contribute. So one parent can contribute $75,000, spouse can contribute $75,000. So total $150,000 can be contributed to the 529 plan in any year, and next 5 years they are not supposed to do the contribution. It's a lump sum payment. That is also allowed.
Oh, okay, got it, Anil. So what if the child decides not to pursue higher education, and what will happen to these savings?
This is one of the key point people should consider. So what happens if kids don't want to continue their education? Anything may happen. They may become a sports person. They may become a professional golfer, or they may become an athlete, or they might become an entrepreneur at very young age and they don't have time to go to the college. So then what you do, which is a very common situation many parents face. If that is the case, you can transfer the name from one beneficiary to other beneficiary from the same family. But this is one of the challenging one, which I also consider it cons. Like, because when you touch the money, if you don't have any other beneficiaries, then what happens to your money? We will cover that point also as we discuss.
So who are considered members of the same family?
As I was saying, if the kid is not interested to continue their college, they can transfer the money to other family member. So who are there? Your children, like you might be having some other kid, or your stepchildren, or children's spouses, or your niece or nephews, and all are considered as a same family member and the same generation. You can move this money in any one account, from one account to other account. You can transfer the balance, but there won't be no federal income tax impact or any gift tax consequences. You can transfer the balances from one account to other account.
So, but you have to prove the relationship that you belong to the same family, right?
Yes, you are right.
So can we switch states if one state seems more beneficial?
This is also good, Andy, a good point, Achalka. There are sometimes some states are better with 529 plan with more benefits, more flexibility to invest money. Some are not so. So obviously, yes, you can transfer the balance from one state account to other state account. So it's just, you can simply switch it. You can switch it, and there won't be any tax impacts in this transfer, and it is allowed.
How often can that be done?
You can do yearly once and a maximum without doing any federal tax consequences. So you can transfer the plan from one state to other state, from that state to other state, but not within the same year. One state to one state is allowed one per year.
That's great, actually. So what happens if you want or need to get your money back from 529?
Okay. So again, federal taxes are a bit flexible here again. They allow you to take the money. If you really need some money, yes, you can take the money. But if you remember, when you contribute, you might not got tax deduction at the federal level. But when you want to withdraw money, because you are taking back your own money, but this money would have got some earnings. If you withdraw any of those earnings, you will be paid taxes on those earnings. And also you owe 10% penalty on any of the such earnings withdrawal. And there are two types of plans are there, and I want to make it clear. Section 529 college savings plan and section 529 prepaid college tuition plan. There are two types of plans. So we need to be both have is like both are slightly different, but there are people should not get confused what is what. But till now, whatever we are discussing, those are for section 529. It can be both plans.
Yeah, but they both sounded similar when you just told them. What is the difference between 529 college savings and 529 tuition plans?
So both are explained under section 529 plans itself, under section 529 internal revenue code. That's what both are, in general, both are called section 529 plans, but both has two different treatment on how you build the money, how you build the wealth, how you build the funds. So the first one is I shall say 529 prepaid college tuition plan. It means you are locking in the tuition fee for a specific college from now onwards. You know, this person, my kid will go to my local university for the 4 years education, and you can go and open an account with 529 prepaid tuition college fee, and you can lock the price of the college fees. So based on that, they will tell you the price, how much, they will tell you how much you need to contribute year on year. You just contribute that amount and it will be taken care, the college tuition will be taken care. You are locking the college tuition fee when your kid go to the college. It can be few years from now. So, and in the contrast, 529 college saving plans, how does it work? You don't know to which college they are going, so but you will start contributing it, but the rate of return on your investment, because this 529 plan funds can be invested in liquid funds, stock market, mutual funds, or many bonds, you can do it. So, but on this number, it can be, generally college fees goes up year on year based on inflation. But when you do this college savings, the regular plan, your rate of return on your investments might be more than the inflation price. If the inflation is at 3%, you may be able to get a rate of return by 4% or 5% also. So this is the major difference. So the first one, college prepaid tuition plan, where you are locking in the college fees, so that the college generally goes up based on the inflation rate. But if you don't know to which college your kid is going, then you are contributing in a regular generic account, and you are investing this money in somewhere, and you will be getting some income on the investments. It can be more than inflation, it can be less than inflation. Inflation rate. Yeah.
What? Which is better in this? What do you think? Which is a better plan?
Okay. So, as I was explaining, 529 plan, if you think you can manage funds better, then the regular college savings plan is better. Because if you think that wherever you have the money, I strongly believe the rate of return on the investments should be more than inflation. Otherwise, you are losing your money. Your money is depletion. So you need to plan in such a way that if you think that no, I will make more than 3%, that currently the inflation is 3%. You can manage the funds more than with a rate of return of more than 3%, then college savings funds. But if you think that I don't want to manage my funds, I want to send my son to that specific college, why can't I just send it? I lock the price of the college fees and just start contributing. So it depends on what is your wish, whether you want to manage funds on your own or you want to just contribute and leave it. So sometimes you may get more, when you get more than 3% rate of return which is a more than inflation rate, you might be having much more balances, which can be used for some other eligible expenses. Not only college fee, there are a lot of other eligible expenses also can be, for other eligible expenses can also be used from this 529 plan. Okay. So it's important to know the difference when you are choosing which account you want.
So let's take a short break in TV Asia Telugu talk show with the experts and come back in.
ఎక్స్చేంజ్ 8,000 రూపాయల బ్యాలెన్స్ మ్యామ్.
ఇవ్వనక్కర్లేదమ్మా, 8,000 మీకే వస్తాయి.
ఎస్ మ్యామ్, మేము కేవలం హాల్మార్క్ 916 గోల్డ్నే అమ్ముతాం. ఇంకా మీకు దొరికింది 100% ఎక్స్చేంజ్ వాల్యూ.
క్వాలిటీ, ఇది మలబార్ ప్రామిస్.
Where have you been?
I went to vote.
Why bother? One vote doesn't make any difference.
Of course it does. Desi vote just turned Georgia blue.
Yeah, but I don't do politics.
But politics is being done to you. Make your voice heard against openly racist and corrupt people. It's about our children and grandchildren.
You're right. May I ask who did you vote for?
Democrats, Ossoff and Warnock, of course.
Grandma knows best. TSP Victory is responsible for the contents of this ad.
ఇది మా హీరో అల్లుడు కోసం ఫిట్ గా ఉంటుంది. పర్ఫెక్ట్ గా ఫిట్ అవుతుంది. ఇది మైండ్ డైమండ్, 100% క్వాలిటీ.
సార్, ప్రతి మైండ్ డైమండ్ న్యాచురల్. ఇంకా మేము 28 క్వాలిటీ టెస్ట్లు చేస్తాం.
28 టెస్ట్లా?
ప్రతి డైమండ్ జ్యువెలరీతో పాటు ఇంటర్నేషనల్ ల్యాబ్ సర్టిఫికేట్ కూడా.
కళ్ళు మూసుకుని మీ హీరో కోసం వజ్రాలను తీసుకోండి. ఇది మలబార్ ప్రామిస్.
Welcome back to TV Asia Telugu talk show with experts. TV Asia Telugu is available on WorldBBTV, Dish Network and website and YouTube, and TV Asia Telugu Facebook page is also there. Please log into one of these channels whenever you have some time. You can watch these wonderful informative shows and entertainment shows as well. Anil garu, welcome back to the show, Andy.
Sure, Andy. Thank you, Andy. Thank you. Yep.
Oh. Next, we'll start with which 529 plan is the best plan?
As I was discussing different plans, different types of plans, what are the advantages and everything. In-state plan, out-state plan and everything. So what I want to recommend is, you personally, the viewers should decide. Individual level, they should decide. Because it depends on which state they are living, how many kids they have, how much time. The early you invest, you can save more. If your college kid is going in the next couple of years, then it might not be a great advantage. Because the money, whatever you invest, you might not get a tax deduction. But when you withdraw money, you get the income or the earnings, whatever you made on your investments are tax free. That is the major advantage of this 529 plan. But if you don't have so much of plan to get the returns, you don't have time to get the returns, to get big returns, then it plays a key role in taking a decision whether you want a 529 plan or not. So, but what the good thing is, these plans are very low management fee. This is very attractive, and because these are the state sponsored plans. And as I said, it depends on which state is good for you. I mean, it depends on which state you are living. Some states allows you tax deductions. Some states are very good. They are more flexible on with the 529 plans. And the states are so consistently changing their plans. They are bringing in more features into the plan. More changes are coming up. So I want to refer one website here, savingsforcollege.com. This is a very good website where you can get into the website and explore which state 529 plan is good for you, considering your all other parameters, whatever we discussed.
When it comes to think about 529 plan, the time horizon is also very important. That's what you are saying, Kadami. Because if there is not much time, because we always have to give it time to grow the funds. So depends on the time horizon also, we can decide whether it is or it's the best or not based on the time.
Yes, Sandy, you are right.
So will there be kiddie tax and section 529 plans, Sandy?
So kiddie tax, you don't need to worry about the kiddie tax because the income is completely tax free when you withdraw for the qualified expenses, for qualified education expenses by the beneficiary. So you don't need to worry about the kiddie tax here.
So when should we factor in this kiddie tax come when planning for children's education?
Okay. When to factor is in golden days, in old golden days, people used to invest money on their kids' name and kids are at lower tax bracket. But now, if kids get any unearned income, they are added back to parents' income, and parents needs to pay taxes at their tax rate and not at kids' tax rate. If kids are getting any earned income, if they are working, and then they are responsible to pay taxes at their rate. So for in this situation, in the for 529 plan, you don't need to worry about the kiddie tax because it's a tax free as long as kids use it for the given qualified expenses purpose.
So what are the limitations an investor should consider from 529 plan?
This is a very good point. As of now, till now, we discussed about what are the tax advantages, what advantages we have with the 529 plan. But at the same time, we should also know the other side of the coin. What are the limitations you have with this if you invest money for your 529 plan? The first one is there is no federal tax deduction for your contribution. I mean, the tax deduction for your contribution. Some states allow state tax deduction. So first you need to check whether your state is helping this or not. If yes, then yes, then you need to consider it. Number two, there is a flexibility, a bit limitation on what to use the money, how to use this money if your beneficiary is not going to the college, or if he doesn't need a funding from the college, from the 529 plan. He might get a merit scholarship. So then what do you do with this money? You have an option to transfer to the other kid, but most of our community members are very smart and most of the kids get merit scholarships. So in those cases, what happens to this money? If you withdraw money, you need to pay 10% penalty, and also you need to pay taxes on the income whatever you made on your investments. That is point number two. And number three, the growth opportunity is a bit less because only conservative funds are available in general for few states. But some states are very good. Some states are very much flexible. You can invest in any stock market. You can buy any stock. It's like just investing your money in a Fidelity or Vanguard. Through a stock brokerage account. Some states are flexible. Some states are not flexible. So that also you need to consider which state is helping you, which state is good, where you are putting the money. So these are the three things, and the timing. Timing is very, very important. So if you have a lot of time, then I recommend, yes, you need to consider whether you want to invest 529 plans or not. There may be many more other kits, but based on your situation, there may be other strategies might be applicable for you. I recommend you to talk with your financial advisor before you take the decision.
So what are the other ways to save for children's education?
Yes. Apart from 529 plan, okay, so there are some other ways. General I recommend is Roth IRA account. If your kids have any earned income, if they are working for, if you're an entrepreneur, we had a separate topic last time on hiring kids. Go and watch that our previous live show recording on the hiring kids. If you are an entrepreneur, if you are a business owner, you can hire your kids. You can pay them, and they can contribute to the Roth IRA account. We have done a exclusive live show on how to become a tax-free millionaire with a Roth IRA account. So please go and watch it. Roth IRA is one of the best strategy you can consider when you're investing from the tax perspective. So Roth IRA might, and if you invest any money in the Roth IRA, that money can be withdrawn for kids education. And you can also invest in traditional savings account for your kids, but you will be paying some taxes there. And there are two other accounts are there, which is called UGMA and UTMA accounts. So they are also very good to consider.
Mm-hmm. So what are the UGMA and UTMA accounts?
UGMA stands for Uniform Gift to Minors Act, and UTMA stands for Uniform Transfer to Minors Act. So the both two accounts are supported by the government, and I give it at very high level considering the shortage of the time. If you invest money in these accounts, and if you take the money out in the future, some portion is tax-free, some portion is taxable to the parent, some portion is taxable to the kid at the kid's income tax rate, parents' income tax rate, and some portion is not taxable. But you don't have any restrictions on how to use this money. Like 529 plan, you have to use it only for the qualified expenses. But for this, you don't have any restrictions here. And you can use this money when you contribute to this account. You do also have an option to transfer assets. You can transfer stock, you can transfer bonds, you can transfer any real estate. If you have any valuable assets, anything you can transfer to this account. You don't have to contribute only in cash. You can contribute in any form to this account, and it is a semi-tax free. Some amount is taxable, some is not taxable, and there are no restrictions on this usage of this account of these funds.
Yeah. So this sounds cool and easy, but this must have its drawbacks. So what are they?
Certainly, you guessed it right. The downside is your kids will have complete control of these accounts when they become major. Some states says 18 years is they become major, but some states are 21 years. When they become the major, the beneficiary, he has a complete control of this. He doesn't need to use it for the college. He can even go for a world tour, or he can spend money for whatever he has, whatever purpose he wants to use it. And this may some people say that this may have a negative impact on the for the kids, because when they are young, when they just become major and they have a lot of money in their account, they may misuse it. Number one. Number two is it also has an impact on financial aid computation. So financial aid calculation. So when your kids go to the college, so this amount is considered as this has an impact on the financial aid. So these are the disadvantages or limitations you should consider about UTMA and UGMA accounts.
Nice, Andy. So what is your valuable takeaways from this?
So the demand on parents and students to fund their college education college education requirement is increasing tremendously. The college fees are going up tremendously. So, and our expenses are gone up. The savings are come down. College fees are going up. Considering all these scenarios, it is very highly recommended that you should have a plan to save funds for your college, for your kids' education. It's never too late to start a good action plan. So there are a lot of tax. There are a lot of other strategies can also be implemented for your kids' college saving education. And I strongly recommend talk to your financial advisor before you take a decision, because your financial situation matters a lot when you are deciding which funds work for you. And if you need any help, reach out to me. I'm happy to get on to call with you and go through the details and help you, or go and talk to your personal financial advisor for kids education plan. Every investment has pros and cons, and you are the person, you are the owner, you are the ship, you are the captain for your ship. You need to take the decision what is good, what is bad. When you take the decision, get a second opinion before you take the decision. Talk to your financial advisor and get the best out of them to take a decision. That's it from my side.
Thank you, Anil garu. This is all about today's show andi. So thank you so much for the valuable information on kids education plans. So మరి next week మళ్ళీ ఇంకో కొత్త టాపిక్ తోటి మళ్ళీ కలుద్దామండి. Till then have a wonderful week ahead. Thank you.
ఎక్స్చేంజ్ 8,000 రూపాయల బ్యాలెన్స్ మ్యామ్.
ఇవ్వనక్కర్లేదమ్మా, 8,000 మీకే వస్తాయి.
ఎస్ మ్యామ్, మేము కేవలం హాల్మార్క్ 916 గోల్డ్ నే అమ్ముతాం. ఇంకా మీకు దొరికింది 100% ఎక్స్చేంజ్ వాల్యూ.
క్వాలిటీ, ఇది మలబార్ ప్రామిస్.
I fear becoming a second-class citizen.
I fear being attacked for my faith.
I fear for my child's future.
I fear being in debt all my life.
I fear losing my job and my health care.
I fear science and facts will have no place here.
I dream of respect for all.
I dream of combating COVID-19 and climate change.
I dream of restoring America's promise.
I dream the American dream.
Vote for the country of our dreams. Vote Ossoff and Warnock. TSB Victory is responsible for the contents of this ad.
ఇది మా హీరో అల్లుడు కోసం ఫిట్ గా ఉంటుంది. పర్ఫెక్ట్ గా ఫిట్ అవుతుంది. ఇది మైండ్ డైమండ్, 100% క్వాలిటీ.
సార్, ప్రతి మైండ్ డైమండ్ న్యాచురల్. ఇంకా మేము 28 క్వాలిటీ టెస్ట్లు చేస్తాం.
28 టెస్ట్లా?
ప్రతి డైమండ్ జ్యువెలరీతో పాటు ఇంటర్నేషనల్ ల్యాబ్ సర్టిఫికేట్ కూడా.
కళ్ళు మూసుకుని మీ హీరో కోసం వజ్రాలను తీసుకోండి. ఇది మలబార్ ప్రామిస్.